What's up guys, my name is Derek Jackson. Welcome back to yet another video. Now if you watched the previous video that I made last week, you would have saw that we talked about 4 different theories of what this random MMTLP ticker symbol is. It used to be the preferred stock dividend that you had to qualify for, but now you can trade it. So there's a lot of confusion up in the air. So hopefully you guys watch that and check that out. But towards the end of the video, I emphasized on the 4th theory that I had, which was that it was some type of potential market manipulation tool by hedge funds and market makers. And I emphasized a little bit more about something that I read on Reddit from a particular post that mentioned something called Cellar Boxing. It says cellular boxing, but it's Cellar Boxing. And I found that really interesting, obviously, because I didn't know what it was. So being the new investor that I am, I decided to sit down and try to look up as much information as I can about it. And hopefully by the end of this video, we can talk about what Cellar Boxing even is, how it's beneficial for hedge funds and market makers. And then we'll talk about if this is actually something that's happening with MMTLP, or if this is just another option that was thrown in the air. So let's not waste any time. Let's get started. So to start this all off, of course, I had to go on Google and type in what is Cellar Boxing to get this research started. And I was really hoping this was going to be one of those financial definitions I was going to find on Investopedia, until I didn't. So that made this a lot more interesting, a lot more concerning. But eventually I found some information and I concluded, with the help of a lot of Reddit posts on a lot of websites, that the best way for me to explain this is to explain it with a story of a fake company that we're going to call Company X. So let's say Company X is just any type of company in the stock market, and its stock price isn't doing great. It's actually dropping, but just a little bit. And let's say there's a hedge fund out there, or a group of hedge funds that genuinely think that this company is not going to do well, so they want to profit off the demise of this company. And one of the ways you can do that, one of the legal ways you can do that, by the way, is to short sell. We've talked about short selling before, but it's basically the act of borrowing the stock from your brokerage and then using that stock and selling it immediately. And then you hold on to that share, wait for the price to go down as you assume it will. It goes down, you buy back in at a cheaper price, and you return that share, not the actual dollar amount, but the share back to your broker, and you pocket the difference. So for example, if Company X in this case was $10 a share, you borrow 1 share of Company X from your broker and you sell it at $10 a share, you currently have $10 which you owe to your broker. But let's say you believe it's going to drop, and within a couple of weeks it drops down to $5 per share. So you use that, you buy back in at $5 a share, and you return that back to your broker. But now you pocket the remaining $5, or $10 minus $5. So that's how shorting a company's stock works. And this is definitely that you shouldn't do if you're the fan of heart, because one of the biggest cons, in my opinion, the biggest con of short selling is that the amount of money you could lose is infinite, because you can only make profit if the company's stock price goes down. But if it goes up, it can go up to ideally some infinite price. And the higher it goes, the more you lose, because you got to make up that money back. But that's aside the point. So let's just say you're shorting this stock and the stock price goes down and continues to go down. You're pressuring other investors to sell because they have no idea what's going on, and the longer they wait, the more money they lose. So let's say this hedge fund continues to apply pressure because they want to get as much money as possible from this short. They're trying to get the stock price as close to zero as possible, for a few reasons, which we're going to get into in a second. But one thing we got to keep in mind is that when a company puts itself in the stock market, it gives a specific amount of stocks that it has available. So let's say Company X only puts 1,000 shares of its stock available to be traded on the public market. You can only legally buy and sell and hold a position of 1,000 shares. So if you have a bunch of hedge funds, for example, that are constantly borrowing shares from their broker, eventually their broker's going to run out of shares, because eventually 1,000 shares will be accounted for. And that's where we get to the slightly illegal side of the situation, which is naked short selling. Now, naked short selling is the same concept as short selling, which we previously talked about earlier, except you're borrowing false shares. And that sounds like something that shouldn't happen, because it shouldn't. But because of some type of discrepancy between written and electronic depositions or transactions, there's a lot of loopholes that companies have been able to find, which allow these naked short sales to occur. The point is, with those loopholes, hedge funds are able to borrow more fake shares from their broker and participate in this naked short sell, which will drive the price down to the bare minimum that leads to the point where that particular company, Company X, unfortunately has to file for bankruptcy. And this is where the actual fun for the hedge funds start. So first of all, it's a sad situation, obviously, for the company, because they have to file for bankruptcy. But what's beneficial for the hedge fund is that if they're holding on to a position of a particular company that files for bankruptcy, in the case that they're holding on to a short position, they actually don't have to return it to their broker. So whenever they borrow money, sell it, and then buy back in, they can actually hold on to that position. And because of that, they can hold on to those positions and continue to buy even more of these naked short positions until they get to a specific point that some investors may know as the cellar. The cellar is something that was initiated, I believe, by the NASD and the SEC in the early 2000s as to be the lowest potential price that a company can be to be allowed to trade in the stock market. And that is 1/100th of a penny, aka 0.0001 cents. As long as the price of a company's stock is right there, then it can be traded in the stock market, or actually the OTC, the over-the-counter stock market, as a pink sheet. So that's the whole emphasis on what a cellar is. It's basically forcing the price of a company's stock to go down to that 0.001 cent range, and that is known as a cellar. That's the minimal price that a company could be in order to be traded, even on the OTC. But the next question that I had was, how does this actually benefit hedge funds? Yes, this is something great to assume and just kind of throw it in the air, but we're assuming it for a reason, because a lot of us, again, based off theory number 4 that I talked about in the previous video, believe MMTLP is some type of tool for hedge funds and market makers to use as market manipulation. But how does that exactly work? And the way that works is pretty interesting. And in order for me to actually understand that a lot better, I had to remind myself on the definition of a bid and an ask. Something that I've seen a lot when I do options trading, but something that I didn't get a firm grasp on. And the easiest way for me to define it was to remember kind of how like something like eBay works. Whenever you're trying to sell something online, you put it up at some general price. This is the lowest price that you're willing to sell this particular item for, aka the ask price. And a bunch of people online see it and they start telling you, hey, I'll buy that for $1 more than what you're putting in. And then someone else says, hey, I'll buy it for $1 more or $1 more. And they keep bidding, aka the largest amount of money someone's willing to pay for that item, aka the bid price. So that kind of makes more sense. And the difference between those two is what's known as the bid-ask spread, or just spread in general. Now, what's so significant about this position of the seller is that 100% increase can be accomplished if the price of that particular stock goes from 0.0001 just to 0.0002. So this spread alone that seems so small can actually equate to a major 100% profit, which means if you put $1 into a particular stock that has a 0.0001 price and it goes up to an ask of 0.0002 cents, then you just made another $1. But imagine these hedge funds have $1 million and it goes up that much. Then that's 100% profit. And when they sell those shares that they didn't have to return to their broker, then they just made another $1 million. And imagine if that's 5 million, 10 million, $100 million. That's a lot of money that they can actually profit off people and retail investors trying to pump this company back up. And the boxing aspect of it comes in to when the hedge funds decide, okay, this is a lot of money for the time being, but we don't want this company to start rising back up. We're gonna go on ahead and naked short sell it again and drop it back down to that cellar boxing. Hopefully that made a lot of sense, and if not, please leave comments below. I'll definitely follow up with a video that hopefully breaks it down a lot easier for you guys. But the final question, based off all that information, is this something that's actually important or actually happening with MMTLP? And my immediate answer is no, because right now, a lot of the things that's going on with MMTLP, or even what its situation is, what is it exactly, how to become tradable, there seems to not be a definite answer yet. And I think there won't be a definite answer until we hear from metamaterials themselves. Not sure what's taking them so long, not sure what's taking the board of directors so long, but hopefully they're coming up with something, because this is the big headlining news with this company. So in the meantime, everything we're seeing on Reddit, everything we're seeing on StockTwits, everything we're talking about on YouTube, including what I'm talking about right now, is more than likely theory based off other facts. On top of that, this seller level, the 0.0001 cents that was made by the NASD, actually should have changed because the NASD and a branch of the New York Stock Exchange merged together in 2007 to become FINRA. So I would think at that point, certain things would change, but who knows? There's not a lot of evidence that shows that Cellar Boxing is something that could be happening. The real villain in this case wouldn't be Cellar Boxing. That's just defining a particular point that a price can get to. It's the naked short selling that's the issue. And that's something we've talked about in multiple videos, and that's something you'll see a lot of other YouTubers on a lot of stocks like this one, AMC, GME back in the day also talk about as well. So that's something that we have to look out for. So at the end of the day, I'm just going to continue to personally hold on to these stocks, especially because I'm a believer in this company. And with MMTLP, I have no idea what's going on. So I'm going to just hold on to it and see what happens. But if you haven't had a chance to watch the previous video, make sure you watch it right here. It's the one I came out with last week. Hopefully you guys enjoyed the video. I appreciate you guys watching, and until next time, take care.